Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Good day, Santa. Thanks for confirming. Asian session live market analysis on November 28 between 5 and 5:30 GMT. We wish to track the market using the live market code page. Again, the link for the same. You can open the link in a Internet Explorer and review the live market codes. I'll also focus the camera over that of the live market code page. Currently, Euro is trading around 1.3283, 1.3285, 1.3245 is the low, 1.3341 is the high. About 100 pips spread has happened already, and from that of the Friday close, slightly above, they has gained the level from there to 33 area and currently showing about 47 pips positive net change. Now we can understand why they made the drop on Thursday and Friday for that of the Thanksgiving Day, and now they accumulated all the buys to gain the levels and book profit. So this is what they do it on a daily basis. So we need to understand that the players drop to buy and rise to book profit with their positions. GBP is trading around 1.5495, 1.5499, 1.5450 is the low, 1.5523 is the high, 58 pips positive net change is seen. When compared to Euro, GBP has slightly gained more levels. You know that GBP is the currency which is used to create the market sentiment. On the downside on Thursday and Friday, it was making the move, and now it is they started gaining the moves on the upside and making more when compared to that of Euro. Then in the case of Yen, on Friday they gained the levels from that of the consolidated level of 77.12, 77.20 and things like that. And today you find that 77.47 is the low, 77.72 is the high. About 25 to 30 pips spread is seen, and you come across 9 pips negative net change is seen. So in Euro and GBP we are showing positive net change, and USDN and USDCHF show negative net change. We know that they are making the USD weakening move for the week beginning and during that of the Japanese session. And USD-CHF is trading around 92.86, 92.89, 92.59 is the low, 93.17 is the high, 14 pips negative net change is seen. When Euro has made about 51 pips positive net change, CHF has made only about 15 pips negative net change. It shows that they do not want to drop more USD-CHF, and even though Euro is gaining, Euro and GBP are gaining, they intend to gain the levels in the case of CHF alternatively whenever there is a small dip in the case of Euro. And with regard to the commodity pairs, there again you come across the USD weakening move. Canadian dollar is trading around 1.0407, 1.0411, 1.0394 below the psychological level of 1.04. You come across the low, and the high was 1.0470, 60 pips negative net change is seen. When Australian dollar is showing about 132 pips positive net change, which is leading the rally when compared to the Euro and GBP, and that is to gain and simply give the change in the market sentiment for the week beginning. And Australian dollar is trading around 98.42, 98.48, 97.27 is the low, 98.86 is the high. So when Australian dollar has gained about 130 pips, Canadian dollar has not dropped 130. Instead, it has dropped to only about 59, 60 pips. So here again, they wanted to make less drop and more gain moves in the case of the denominator currencies, and they wanted to gain the levels more with regard to the numerator currencies. And now probably in a day or two, people will start telling that it is a year-end move because of that Euro and GBP we are gaining during the Thanksgiving phase. And before that, people are telling that they are looking for 1.25 or 27 in the case of Euro and 1.5052 in the case of GBP. That sort of talks were seen, and they were very bearish, and suddenly they start giving the call that market might be bullish for the year end. So this is how you find the market sentiment is created, and people at a delayed fashion realize it later on. So only if you are quick with it, then you will be able to understand that the players can change the market sentiment overnight. And let me go back to the and with regard to the commodity, with regard to their crosses, you find Euro GBP gained nominally just 1 pip, and 85.72, 85.75 at the current level. 85.70 is the low, 86.12 is the high. They intend to make a small gain. They made the gain already by making a lower level move in the case of GBP and gaining more in the case of Euro. Subsequently, they started gaining more in the case of GBP, and they are expected to make a slide in the case of Euro GBP and gain in the case of Euro CHF, because CHF they are showing less drop, whereas Euro has got more gains. So, in the case of yen crosses, all along it was trading last week at a lower level. Probably as yen started gaining the levels along with that of Euro and GBP, so you could come across more gains in the case of the yen crosses as well. So yen cross is already showing the positive net change. Euro yen is showing about 28 pips positive net change, and GBP yen is showing about 32 pips positive net change. So they intend to gain more levels in the case of the yen crosses during the week. And let me go back to that of the PowerPoint presentation, and it's like the expected market for today and the rest of the days of the week. During Japanese session, they are expected to make the volatile move, create a little bit of uncertainty whether it is a false breakout on the upside to drop and things like that. Probably it will try to give an impression of that nature and firm up. Then again, during the start of the European session, they are expected to make the higher level volatile moves and then make a small slide towards close of European session, and they may come to that of the current levels and may not drop more after the gains, and during your session swing and quick rise could be seen, and then we'll understand that the market made the volatile move, but players intend to gain more levels in the case of Euro and GBP and also in the case of denominator currencies. Then the volatile moves may prevail in this particular week, because this particular week you find the fall of the ending of November is seen. So 28th, 29th and 30th are the end of November days, and 1st and 2nd are the next month beginning days. So when a week has the month end and the month beginning time frames, then you come across more volatile move and more aggressive moves could be seen. So in this aggressive moves, you find Euro and GBP are expected to gain more levels, and sudden quick drops they may show as if the market is going to reverse for any of the data release and things like that. But after about 30 minutes, they could gain back the levels. So irrespective of the data which is being released from Europe or US, they are expected to gain the levels in the case of Euro and GBP, and people might think that the same bearish sentiments might prevail in this week, but they are expected to change it to that of the bullish sentiment and start gaining the levels aggressively during the month end time and try to hit all the stops or hit the options which are expiring during month end time frame and try to earn out of that. That is why you come across in the case of USDN, a sudden gain started from that of last Friday. So they have a purpose for every move that we need to understand. Now, the expected market moves for the rest of the days in this particular week. On 29th, we could come across again the volatile moves tomorrow. Volatile moves to prevail, and again quick rise could be seen during the US session. And on 30th, it is a month end for November, we could come across very high opening, upward gap opening, and a quick drop from there, and again very good rise towards close, and little bit of profit booking moves during the US session. Then on 1st, you will come across again the volatile moves, and on a daily basis, they could open higher and make a drop from there and continue to gain the levels. And on second, you find the non-farm payroll is going to be announced on second Friday around 13:30 GMT, and the market is expecting a nominal gain in the case of the numbers, but we could come across some surprising upward revisions with regard to the numbers, and because of that, the risk appetite moves could come in the market, and we could come across Euro and GBP gaining significantly in the name of risk appetite for a positive non-farm payroll data. So that is how they are expected to make the moves in this particular month. These are all theoretically derived. Okay? And there can be a variation in the actual market. So use it as a guiding factor and try to see whether they are trying to move in tandem with that of the expectations or against. So if they move in tandem with that of the expectations, try to book profit. During this particular week, don't do position trade. You can only do swing trade. When they quickly gain about 150, 200 pips, book profit, and then see that they drop again and probably do a sell and buy trade as well on the other side. So this sort of volatile moves are expected to happen during this particular week, and they are not good for position trade because suddenly they will reverse and you will repent that I have missed that opportunity. So use the trailing stop, otherwise buy positions to book profit. Once the position makes profit, or use the hedging, try to do either way trades. With regard to the initial lows and the highs set for today, Euro formed the low 1.3245 and the high was 1.3341, and they are in the middle level or slightly closer to the low, slightly away from the low, but still below that of the psychological level, 1.33 in the case of Euro. They are expected to gain again the levels, and probably they may not make downward stop on today, and they may just come up to that of the middle level and go up again. And in the case of GBP, 54.50 is the low, and here again they may not do the downward stop, and 55.23 is the high. They are just trying to keep it below that of the psychological level, 1.55, and they could gain again the levels. Then CHF, 90 to 59 was the low. They formed the low around 3:30 GMT. Subsequently, they started gaining the level, and we find that whenever a small dip happens in Euro, and say for example 10 pips drop in Euro, they could gain 20 pips in the case of CH. That sort of moves you could come across. The 93.17 will be high. That is also not breached, but they are closer or in the middle level at the moment. Then Yen, 77.47 is the low. That is not breached. 77.72 is the high. Still, it is not being breached in all the currencies. In all majors, the lows and the highs are not being breached. So you could come across to as closer. Japanese session, they started breaching the highs. Then Australian dollar, the low was 97.27 and the high was 98.86, and they are not breached the high or the low, but they are holding again in the middle level closer to the high when compared to the low, and they could gain some more level, but you know that commodities, they lead the rally and lag behind. Don't expect the same quantum of rise what you envisage in the case of Euro and GBP. They could gain the level and drop back, gain the level and drop back. In a process, they could gain slowly 50 pips on a daily basis. That sort of moves could be seen in the case of Australian dollar. And when Euro and GBP make about 100 pips drop, immediately they will make 200 pips drop in the case of Australian dollar. Then Canadian dollar, 1.0394 is the low, 1.0470 is the high. They are not breached the low or the high. And currently, they are trading in the middle level or closer to low. 1.0412 is the current level of trading. So they are closer to low. And they are expected to make a downward swap and followed by that upward swap. And that sort of moves could be seen during the last week of the month. And slowly they could gain on a daily basis about 50 pips. So these are all the analysis I'm able to do it before you. And the market is expected to make aggressive moves during this particular week. So trade with caution using a hedging or stop. and don't take unlimited risk. Avoid over trading. That way you will be able to preserve your money. At the same time, participate in the market to earn money. If you don't take any position, you will not be able to earn. You can only say my prediction has come true and things like that. Or my prediction has gone wrong. That sort of comments you can make. But if you participate, you will be able to earn money. But take very less positions so that you can afford to calmly wait and book profit in those positions. But try to focus more on the swing trades. Once a position makes profit, keep stop at entry and try to maximize the profit during such quick aggressive moves. Don't be in a hurry to book profit of 10-15 pips when the going is good, because they are expected to make very quick up and down moves in the market. Trailing stops will really help you to grab the profit during such type of moves. Let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over the document. Live market quote page. Okay, Roni. We expect 450 pips range in this particular week. Yeah, 300 to 400 pips. Gains could be seen. That is what envisaged in this particular week. And especially in the last 3 days of this month, we could come across more gains. So this is the last week of the month, no week beginning false move. The market is expected to make on a daily basis volatile moves. Very aggressive drop and aggressive gain, that sort of moves could be seen, but more gains are expected in the market in Euro and GBP. In GDP, you expect that gap to be closed in Euro and GBP. They may not close it today, and probably they might try to do it tomorrow. It all depends upon how much gain they make it. Because on Friday, they made the drop and held the market near that of the low and accumulated all the buy positions. So in a hurry, they wanted to book profit. So in that, they may not fill the gap. And so since they are not fill the gap, and when they gain the levels, people will think that they can just take a sell position so that when they try to fill the gap, they will be able to book profit, and it is not mandatory for the players to fill the gap. By that, they are not supposed to rest. They need not respect scientific understanding. They can always try to trap the traders. Here in Matthew, breaching last week low of 32.08 and the last month's low of 31.38 in Europe. I am not envisaging that sort of drop. On Friday, they are not supposed to drop, but it has noticed that a lot of traders are holding long positions to close it on Friday from other markets like European and Asian regions, and they have been induced to liquidate the long positions on Friday because not many of short sellers were seen. So obviously the traders are trying to make the sensible trades of buy and sell trades because after the drop. But still, you know that if you try to do the bottom fishing, the players will try to discourage you or try to give the fear for you to book 20-30 pips profit in that when they intend to gain about 1,000 to 1,500 pips. So that is what happens normally. Suddenly they are expected to gain the levels and not to look back. And they will simply say that here and rally. Then Scott. When an initial high or low is breached for more than 30 minutes, does that set a new high and negate the initial high? Yeah, they set a new high when they breach the initial high and go above and set a new high. Today they are not breached the high or the low, but in case if they breach the high and form a new high, and if they hold below above that of the initial high for more than 30 minutes, they are expected to continue to cut the new high for 3 times for about 1.5 hours. So wait for 2 hours, then they will stop cutting the high, then you can try to book profit. And DDPD. What range do you expect in Australian dollar and GBP? See, instead of estimating the range, See, it is not mandatory for them to respect any range we calculate. And it all depends upon the volume which comes into that other market from time to time. If the volume is good from that other trader as a participation, then probably they could make very good moves. But if the volume is reduced, then probably they have two options. One, to make subdued move. Other one, to make very aggressive move in order to attract traders. So depending upon that, they could make the moves. Normally, during this sort of weeks, you come across about 100 pips on the downside and 150 pips on the upside. That sort of moves we see. Not 30-40 pips gains. Then Scott. So throughout the day, we continuously update the initial low and the high. So they may breach the low and the high from time to time during different sessions of the day. But still, we use the initial low and the high as the reference level. From there, we try to estimate what type of moves they intend to make during the day. Whether they wanted to make an extended move or an intentional move. These are all the two types of moves. Normally, they do it after the session starts, stop and or a false move. Then, what can we expect from Singapore dollar? Singapore dollar is expected to strengthen slowly. Any idea about USD/CHF? Less drop and more gain moves are expected in the case of USD/CHF. So whenever they come closer to low, you try to buy it and calmly hold it. You will be able to see the gains. So any more questions? Shan. USD CAD likely to go above 1.04. No, unlikely, sir. USD CAD could go up to that of the parity or about 1.02, 1.0102. Then start making the slow slide again. Pump and dump moves will be seen in the case of Australian dollar. Slowly, it is expected to come to that of the normal trading zone from that of the multi-year levels. And the estimated range is 0.88. Once it comes to 0.88, then you will come across either ways happening in the market. Then USD CAD likely to go above 1.05. Yeah, after a downward stop, and they are expected to go above 1.0506. Yeah, so Shan asking about Canadian dollar. Yeah, that's what Canadian dollar. I explained it. That it is expected to make a brief downward stop, and it is closer to low, and they could come to about 1.0375, the next psychological level, or 1.35, another psychological level. They could try to hit the stops during this particular week, and then start going above that of 1.0506. Then DTPD. Do you expect Australian dollar to lead the rally up? Yeah, Australian dollar is expected to make a very peculiar type of move this time. See, now they gained about 128 pips from the Friday close. So they could gain like this and drop and hold. And during the time, Euro and GBP could start gaining more levels. But they may not gain immediately. The next day, you can see Australian dollar could make a drop of 50 to 70 pips and then start gaining and gain to 99.10 or 99.20. Then Euro and GBP could go to 1.35 and GBP could go to 1.57, that sort of thing. So here you might find 25 pips to 50 pips gain as a net change on a daily basis. But Euro and GBP could gain more. So what they do is they drop quickly about 75 pips and raise about 100 to 120 pips. So ultimately the net gain will be 25 pips. So initially they started rising more in the case of Australian dollar. So it is leading the rally and it is expected to lag behind slowly. So just because Australian dollar has not gained much, whereas Euro and GBP has gained much during this particular course of the week, to try to take more position in Australian dollar thinking that it could participate in the rally, it might gain momentarily. This is what happens many of the time. So when Euro has already gone up, many traders jump into GBP thinking that it has not gained much, so GBP could go in subsequently. But they may gain about 30-40 pips and start dropping without understanding what they try to do, what the players are trying to do in the market. Because the players might be interested in holding GBP and gaining more levels in the case of Euro in order to gain levels in Euro GBP. So you have to identify what cross they are trying to handle at a given time. Then accordingly you can take positions. Blindly, if you take a position just because GBP looks attractive, Euro looks attractive and things like that, then you might get disappointed. That is the main reason that I want you to study all the currencies in a single page rather than looking into that of the individual currencies in which you are interested to take positions and ignoring the rest of the currencies. Rooney, majors are advisable to trade only during the beginning and the end of the session. Yes, because when the players handle the majors during start of the session and close of the session, that means they're expected to be volatile. They are expected to make quick moves. So suppose you enter long, when they make a quick move of 50 pips, you can book profit. Instead, if you try to take now a buy position, you may have to wait for another 2 hours to book profit of 30-40 pips. Then it might test your patience. Because during mid-sessions, they handle the crosses. Simple. When they are handling crosses, not looking into the majors in a big way, if you take position in major, then obviously you may not come across big moves happening there. Because anybody, after taking the position, they expect a big move to happen so that they can book sizable profit. So identify the time at which they try to make quick moves and try to focus on it. Rather than asking me why. Because that is how they are doing it. And Matthew, what level do you expect Euro and GBP on the upside? See, the upside potency is 150 pips. Net change level on a daily basis. And 350 pips in a weekly basis. Estimate that, you will be able to find out. Then Jason, Euro CHF will be above 1.25. Yeah, it's very likely to gain levels today or tomorrow. GDPT. Did you not give any forecast in the FX trade this week? Where do you expect to see Australian dollar, Euro, and GBP for this week? I already given the forecast, but it is being displayed in FX trade. Kindly explore it. Yesterday it was on the home page. In dollars, I bought GBP at 54.60 and moved stop loss at entry already. Planning to hold it for 1.3725. Okay, 5725 it might be. So if the players want to drop it, let it be. The key for me is a volatile market. Like this one is to manage and not lose money. Yes, you are right. If they hit you at the stop, doesn't matter. You will be given a better chance or better level to enter long in those positions. Always keep it in mind, market continues to give trading opportunities and continue to give better levels to enter if you patiently wait. That is why I always tell the traders, you patiently wait for a good opportunity to enter and exit from that other market rather than taking a position and expect the market to give the good opportunity as you wish. That may not happen immediately. So wait for quick downward move or a quick upward move, then try to take a position. Say they made a very quick upward move, then if you would have taken a sell position, they would have dropped it and it would have booked profit. They make a quick downward move, then try to take a buy position near the low or around that. And when they quickly gain it, book profit. So whenever they make quick moves and stop cutting the low or stop cutting the new high, then try to take the positions. So you have to look for opportunities in the market rather than taking the positions as soon as you open the trading platform and praying to God that the market has to give you profit, and I have been consistently losing, so somehow I have to make money. That sort of distress condition will make you impulsive. Keep that in mind. Will you post Friday's tracking the market together with? Yes, it will be posted in FX Trade. So Adinda has made already the recording of it on Friday. So probably today during the European or the US session, it will be displayed. And subsequently, you'll find this Asian session live market analysis will also be in display. They are also being recorded. Monday webinars, Asian session webinars are recorded, and tracking the forex market together webinars are recorded on a monthly basis. I missed the comments to my questions on the forecast of Australian dollar, euro, and GBP. For this, I explained that there is a potential to gain about 100 to 150 pips on a daily basis. In the case of euro and GBP, Australian dollar is expected to gain less in subsequent days. In fact, you mentioned your algorithm predicts the fall of some big brokers in 2012, months ago. This was before MF Global. See, they are all small. You will come across the big players are being exposed in 2012. So you just watch for it and understand. I cannot say who is going to be trapped and things like that. But, nobody can go against time. Probably in fictions you may come across the time machines and things like that, but nobody can go against time. And the time and the nature is the supreme power. And everybody is under its roof. So when it influences wrongly a person, vulnerably could get caught. So that is how it happens. See, there are so many smart guys in the world, and they mint billions and billions out of their smartness or the cunningness and things like that. But occasionally you come across such big empire falls. You know that so many dictators, they have been ruling that particular country or any particular region for a prolonged period, and some of their weaknesses are exposed and they are being exploited. And from the days of Alexander the Great, you come across this sort of things. So always you come across either on the territory, people might be willing to rule the world. And that Britishers invaded all the countries about 200, 300 years back, and they wanted to rule the world. So this is a normal phenomenon you come across in the world, either physically on the territory or on the financial situation. They wanted to control the world. I don't know how they get that sort of urge, but some people get it, and they sometimes achieve it also, but they cannot sustain it because nature brings in equilibrium. I believe it. So no more questions. So let me go back to that of the PowerPoint presentation. So expected market moves for today. So volatile moves and firm up could be seen during that of the Japanese session. Slowly they could firm up. In GBP they started doing it already. And European session volatile move and slide could happen. Then US session swing and rise moves could be seen. And in this week, you will come across the first 3 days, 28, 29, 30th, that the aggressive gains. And first, they may take it high and drop before that of the non-farm payroll, as if the market could react on the downside. But after the non-farm payroll, they are expected to release, they are expected to take up the market. And in the month of December, they are expected to take up the market further up. So these are all, then they may call it as a year-end rally. So these are all the expected market moves in this particular season. So with regard to the initial lows and the highs, they are not breached the low or the high. And you could come across, they could breach the highs soon during that of the late Japanese and start gaining the levels during European. And after making an upward shot, and they are expected to come down and again take up during that of the year session. Dips or drops are buy opportunities in the market. So I take this opportunity to thank FX Street and also you people who have come here to listen to my talk patiently. And I'll come back again tomorrow and give yet another Asian session live market analysis. Meanwhile, if you want to contact me, you can contact me through email, dr@inoindices.com, or if you want to chat with me through MSN Messenger, inoindices without hyphen @hotmail.com is my chat ID. Thank you one and all. See you tomorrow.